Hi, everybody. Hi, I hope you're doing well. And thank you so much for joining in today for our launch event. So, participants are still coming in, but we'll start, and I'm sure they'll roll in as we move ahead. Now, I'd just like to thank you first for joining me today for the launch of our newest online course. And I'd just like to quickly introduce myself. So, my name is Karan Arora, and I'm the founder and CEO at Beast. And today I'm really very excited to be unveiling the program that we have been working tirelessly for quite a while now, and is definitely our most comprehensive and innovative online course yet. And I'm pretty sure you would not have seen a course like this within the space of behavioral economics yet, at least on the internet. Right? So let's get started now. Before I start, I would just like to influence your perceptions first in my favor by showing you an image here of me with Richard Thaler, who actually won the Nobel Prize in Economics in 2017 for his contributions towards behavioral research. And he's actually one of the founding fathers of behavioral economics itself. Now, I had the pleasure of meeting him at a private event here in New Delhi, which was held by the University of Chicago. And I took him through the idea and work behind Beast. And he was very motivated himself. And, he also motivated me a lot and really told me to quote unquote go for it and keep up the good work that we were doing. So, a simple anecdote that I'm showing you as a significant seal of approval already in our favor, so that you can think of this as a reference point for whatever I will be sharing further. Right now, we'll get to the course soon, but I'd like to quickly give you a brief introduction about us as a company and also the vision behind Beast, so that you'll be able to understand more clearly the motivations driving the creation of a new course. So we are the behavioral economics and science team. And the whole reason behind us existing, or the why, is that we want to democratize behavioral economics for the global south. Now, global south is nothing other than all of your developing countries. Behavioral economics actually has, already gotten ingrained in a lot of the developed world. But we are based out of India, and we want to grow the science in the global south, in the developing and emerging markets. And what we want to do actually is that we want to help people make better decisions. So the core philosophy of our work is driven by the fact that we want to use all of these new behavioral tools, academic and practical insights that are coming out from the field of behavioral economics to help companies, organizations, or even people at large make better decisions and improve economic outcomes and avoid costly mistakes. Right? And we make a lot of poor decisions very often, whether it's related to our health or our well-being or just the way we manage our finances, as behavioral economics is now shown, right? Due to cognitive limitations or time constraints, etc. So we want to bring out this new understanding, towards the global south, and really help people, organizations, make better decisions and improve outcomes for themselves. Now, the way we have actually given shape to this vision is threefold. The first is our research and consulting practice. Now, in a short span, we have worked with a myriad of clients covering various industries, such as banking, financial technology, education, and automobiles. I'm sure you may have already heard of some of these companies that I have on the screen. We have built a wide and deep portfolio of projects covering market research, organizational behavior, incentive design, marketing and sales conversions, financial inclusion, also data driven or machine learning driven modeling of human behavior, and also nudging. So, we have in a short span, so the company was founded towards the end of 2018. And in a short span, we've really worked with a wide variety of clients doing a diverse, variety of projects. The second pillar of our company is Nudge Shop, which are capability building behavioral economics workshops that we conduct for both universities and organizations. And you can see some images here from one of our in person workshops. So I'm stressing the fact that this was in person. And this was held at the Shriram College of Commerce here in New Delhi. And we host these workshops, to transfer the academic and practical knowledge coming out of behavioral economics to professionals or even to students, so that they can apply behavioral economics within their area of work or even start a career as a behavioral scientist if they want to. And we've got a really good response in these workshops where we run interactive experiments, and students have been reaching out to us wanting to learn more about the field and also perhaps starting a career within this space, which takes me to the third pillar of our company, which is actually Nudge Labs, right? And this is our internal innovation unit. Now, out of Nudge Labs came Beast U, which is our online behavioral economics school, and we launched our first course, Behavioral Economics of Decision Making, last year, which was met with an extremely gratifying response. So, what we learned through our workshops, we took all of those learnings and converted it into a course as the students really wanted one. And you can go over to our website after the event today and read all about the lovely, student feedback that we've received regarding this program. And it was also actually introduced as a foundational program in the University of Alberta in Canada. And I will also be teaching this course at the Indian School of Public Policy later this year. So this is the course, that came out of our internal innovation unit, and really focuses on, being a foundational program in behavioral economics, so that you can learn, the core principles and start to think like a behavioral economist using behavioral change frameworks to actually solve problems in the real world. And we've got students from a wide range of backgrounds like product design, marketing, economics, consulting, etc. Now, we also launched a Beast2 mentorship program, earlier this year, which focused on giving students and professionals one-on-one mentoring with a behavioral scientist or a behavioral economist from the field. And, the discussions were usually around careers in the space of behavioral economics and finance, or, potential academic opportunities, or even guidance regarding research. So, this is what we have been up to so far. And coming now directly to our newest course, so I won't delay it further. The course again is created within our third innovation unit, right, Nudge Labs, and comes as an offering within Beast2, our online school. And when we were thinking of a new course to bring out into the world, we went back to our vision, and 4 key considerations came to mind. First, we wanted to create a course in a high impact area. And what I mean by that is that if our philosophy as a company is to help people make better decisions, then we should help them make better decisions in an area of high importance to them, right? So we make all sorts of decisions. So we decide whether or not to watch a movie, for example, but maybe that's not really a high impact decision. We wanted to really see what are the decisions where there can be costly mistakes and where superior outcomes are achievable, but they're often missed. So that was the first consideration. Now, the second was that, we looked at the industry and did a thorough understanding to ensure that the course we were constructing has high applied value for any student or professional. Now, the course should significantly improve the way professionals or students work, add to their skill set, and also improve their job prospects, whether it's in behavioral economics or any other mainstream industry. The third consideration was that, we wanted to really push the boundaries of the science with what we were doing. And we wanted to bring a course, that really is not available anywhere online, and bring the science out of its premises, and really bring out the best and cutting edge knowledge into the forefront of our students. And lastly, we focused on bringing together a team of highly accomplished academics and practitioners who will have the required domain knowledge, right, to help create and design the best learning experience, the right kind of learning outcomes, and the curriculums that will be the most valuable to our students. So without further ado, I would now like to show you the introductory video of the new course. So there's been, a lot of hush around what it really is. So now I'll be playing the introductory marketing video, and I hope you enjoy it. Warren Buffett famously said that to be a successful investor in the stock markets, you don't need to be smarter than the rest, but you need to be more disciplined than the rest. Now, what he meant, and as various academic studies have now shown, is that investors lose out on returns in the financial markets, not because of the quality of their investments, but because of the quality of their behaviors. Now, our course, Behavioral Finance and Investment Strategy, is here to change that. Being the first course of its kind, globally, bringing both the academic and practical side of behavioral finance into an immersive online learning experience to help you make better behavioral decisions regarding your investments and overall financial well being. In an 8-week comprehensive program into the world of behavioral finance, you will get a thorough understanding of the behavioral underpinnings that drive the financial markets. You will learn about investor psychology and behavioral biases, including your own biases, how these impact your portfolio performance, portfolio returns, and your stock picking abilities, and how you can avoid or combat these biases to become a better trader or investor. You will also be taking a peek into the world of behavioral finance funds to learn about behavior based trading and investment strategies that are being used and implemented by some of the largest banks and investment management funds globally to profit from market irrationalities and exuberance. Best of all, you will learn from a supremely accomplished faculty that have experienced both the academic and applied worlds of behavioral finance and investing, having seen firsthand the role and importance of behaviors in global financial markets and investment performance. This course is for you if you're a working professional in finance, prospective entrant, or a retail investor. Or maybe you're a curious self-learner that wants to improve their knowledge about financial markets and manage their own money better. I look forward to seeing you in the classroom. Right, so hi everybody. Uh, yeah, so welcome back from that short, detour, and I'm so elated to have finally shared, that with you. So as you have seen now, the new course is within the highly exciting and dynamic field of behavioral finance, and we have actually combined it with a truly practically focused domain of investment strategy. Now, both of these have grown significantly within both academia and industry in the last few decades. And this course brings it out into the purview of professionals, retail investors, prospective entrants, or even people who want to just understand their own financial behaviors better and improve financial well-being. Right. So the course that we've created now, I'm sure you can see, ties back to the four considerations that we had. What other sort of high impact area is there for a person's choices, as we've seen now also, during the pandemic, then actually finance, right? So saving enough or getting the right kind of returns from the markets, even organizational, financial decisions. So this is the space, where we're launching our new course. And I just like to now, for the rest of the presentation, give you a brief background about behavioral finance first, why the course is currently important with what's happening in academia and industry, and then also take you through the key outcomes and also the experience of the entire program. So, starting first with, what's happening in finance, right? So finance has actually changed forever. So behavioral thinking is now ingrained into, the way financial organizations work, or even the way academics actually approach finance. And I have some, examples here to share with you where, the last three, Nobel Prizes that I have here have gone, in the past to academics who have shown that people make significant errors when making financial decisions. So starting off with Daniel Kahneman, his research with Amos Tversky, really unraveling, how we make choices and decisions when we face risk. Then, we have Robert Schiller and Richard Thaler who are taking, this new behavioral way of understanding financial decision making and really applying it to the financial markets as a whole to really see whether investors too fall for various shortcuts and biases and errors in their decision making, and what kind of irrationalities actually come out in the markets, like booms and busts, right? Over pessimism, over optimism, and underreaction, and things like that. Excess volatility. So, just a few examples of some of the things that the researchers have now found, and they've been rewarded, right, with a Nobel Prize for the kind of research that they have already conducted. And just building on that previous point, right? So, finance has changed, but how? Now, there are three key areas where finance has changed, and that's where our course focuses as well. So, the first is that, we no longer model the financial markets as taking assumed behavior as a guidance, right? So we're no longer assuming that people are rational and assets are efficiently priced, and you know, it's for example difficult to generate alpha in the long run. So some of these things have actually come under question, right? Through the research of some of these academics, and what they have actually introduced now is that we must understand the markets not as we assume people to be, but as people actually behave. Right? So the first thing that's changed is that behavioral finance models and explains the markets as it is observed rather than assumed. And this typically comes with various irrationalities. Now, second, particular area where finance has changed with the introduction of behavioral finance is that, now we are seeing how professionals and retail investors lose out on economic returns due to poor or emotionally driven decisions. And the word behavior gap was actually coined by the financial advisor Carl Richards to explain the difference between the returns that people enjoy, in their portfolios or investments, and the returns they may have enjoyed, right, if they knew their decision biases in time and attempted to combat them. So, here's actually some very interesting evidence about how this works. So Dalbar, in its 2007 report called Quantitative Analysis of Investor Behavior, found that in the past 20 years, the American S&P 500 index returned an average of 11.8% per annum, while the average investor earned only 4.3% per annum, right? So less than half, the market return. And this is what we mean by the behavior gap, right? So in this case, you would have been much better off just investing in the market index and holding it, for a long time of 20 years. But people are more complicated than that, right? So we are overconfident. Maybe we don't invest in time. Maybe we take the money out at a wrong time, etc. So a lot of biases, have come into play that we have now seen through the behavioral economics and behavioral finance literature that actually create this behavior gap where the kind of returns that you're actually achieving are much lower than what you would if you had your behaviors in check. Now, just further comment here that, we have actually seen an influx of 40 lakh new retail investors, in India alone during the pandemic. And one can now think and understand, right, the importance of understanding your investment behaviors, particularly also if you're a retail investor, well, it holds for professional investors as well. Lastly, now there has been a spurt of behavioral finance based trading and investment funds that are managing billions of dollars globally, right? And they're using these principles of behavioral finance and this new understanding of observed market behavior to profit from market irrationalities, right? And find underpriced or overpriced securities. Um, you know, Beyond that, they're also looking at how they can combat these errors within their own teams, within organizations, and actually achieve superior returns and outcomes, and also help their clients make better decisions. So if you're a wealth advisor, then understanding your client and his behavioral biases and helping him manage those is another area where finance has changed and where companies are adopting this new way of thinking. So what behavioral finance funds have been doing so far has been fairly elusive. There isn't. It's very difficult to find exactly what kind of strategies they use. You may see a lot of things in Hollywood movies, about them shorting, the 2008 credit crisis. But what kind of techniques are really there and that are really used by some of the big banks. And so obviously they have adopted some of these techniques. They also are helping their clients, and as I showed you in the marketing video, we have some of the largest banks and funds now adopting behavioral finance. So we have the Commonwealth Bank in Australia, like Discovery Bank in South Africa, Aviva Investors, which is training their entire cohort of wealth advisors into this behavioral way of thinking about their clients. JP Morgan Chase, BlackRock, right? Merrill Lynch Capital, which is fintech. So, really, some of the largest banks and funds globally now adopting this way of thinking, right? So, again, tying back to what I said, our vision was for the course, right? So, when we're looking at a course that's very industry focused and where the adoption is high and where the return is also high for a student or professional, then behavioral finance is something that's seen a massive change in the last few decades. Coming now to our course. So our course, has 4 key outcomes, and these outcomes, tie back to the 3 tenets I already shared with you, regarding an observed understanding of market behavior, trying to, curb the behavior gap, and lastly, looking at what kind of investment strategies are available so that you may be able to profit from investors' irrationalities, or even make the process internally as an organization better of actually thinking about the kind of investments that are being made. So the first key outcome, becomes a thorough understanding of the theoretical and empirical underpinnings of behavioral finance, as was identified by the Nobel Prize winning scientists that I showed you earlier. So what are the psychologies that drive investor and market behavior, right, leading to sort of over mispricing or subpar performance, right? We will look at how we can combat or avoid some of these behavioral errors, right, as the third key outcome that make their way into the performance of our portfolios and investments. And so how can we actually combat them as individual traders or investors to actually improve the kind of return that we're getting in? I showed you how this behavior gap can be very, very large, right? So it can be around 50% even. So, what kinds of behavioral errors do we make? And, what kind of really applied, practical techniques can we use to avoid them? And lastly, we will be looking at the key trading and investment strategies that are being used, by some of these funds, how they identify undervaluation or overvaluation, and also, how this ties back into various other techniques like value investing or momentum trading. So, really giving you a behavioral finance sort of toolkit towards your own investment and trading strategies that you can apply, right, within an organization or even as a retail investor. Now, the course has significant value for a range of actors in the world of behavioral finance. So this course is for you if you're a working professional in finance, asset, or risk management that wants to improve their understanding of the markets, right? Avoid decision-based errors and improve returns, like I showed you, right? And it'll be wrong to think that if I'm professional in finance, then I'm smarter than everybody else, and I don't fall for these biases. But trust me, when you will look at our course as well, there's various evidence that actually professionals fall for it too, and our faculty even has seen this firsthand in the financial markets unfolding. So this course is for you, firstly, if you're a working professional in finance. Secondly, it's also for you if you're a prospective entrant and you're coming with a background in economics, MBA, finance, engineering, a CFA, or you're a CS student, right? So you want to stand out from the crowd, you want to upskill with this new behavioral way of thinking about financial markets. You want to build a rewarding career, in finance, and obviously you want to be updated with modern knowledge, right? And as I've shown you now that the adoption is quite big, in industry. And, these skill sets are getting really, really highly valued by both academia and the industry as well. So, if you're a student and you're a prospective entrant, the third is, our large cohort of retail investors, perhaps, who may not have put in the kind of time or, the effort to actually go through entire finance courses or behavioral finance courses, right, in depth, who don't really understand their own financial decision making and behaviors, very well, and they actually fall for some of these biases, right? So you don't perhaps save enough, you don't change asset allocation on time, you hold on to losing stocks, right? So these are some of the behaviors that as a retail investor also it's highly, highly important to be aware of, so that you can combat it. And people obviously give you the exact practical tools that you can use. And lastly, it's for motivated self-learners who want to understand the financial markets better, perhaps for academic purposes, or even just implement certain things in their own financial well-being. Right? So the course, as I'll show you earlier, has entire modules on the relationship between money and happiness, and also how these biases and various errors make their way into our personal budgeting and expenditure decisions. So really a holistic, behavioral finance program, that we're looking at, which is valuable for all of the actors that are working within finance that I have listed here. So whether it's professionally or even personally. Now, I'd just like to, talk about the faculty, a little deeper. I already showed you, quick snapshots during the marketing video, but, I just like to go a little more in depth to really show you how, the faculty that we've got in have significant domain knowledge and really are the best people to learn, behavioral finance and its overlap with, investment performance and return. So, first we have Bruce Riegel, who is head of department business law and society at St. Mary's University in Twickenham. He's also adjunct professor of behavioral finance at the Alberta School of Business in the University of Alberta. Now, Bruce has had more than a 25 long career in finance and banking, previously also being the chief operating officer, global banking at Deutsche Bank. And he holds an MBA Finance and International Economics from the Booth School of Business in Chicago. And he also has an MSc in Behavioral and Economic Science from the University of Warwick. So, coming with obviously very supremely accomplished academic and practical experiences in finance and behavioral finance. Second, we have Wim Steemers, who is founder, chief investment officer, and portfolio manager at Rose Valley Advisory. Now, at Rose Valley Advisory, Wim actually manages the Rose Valley family of funds, which are a series of high conviction behavioral finance based funds, and it's algorithm based. So, he really has a team, and he's really implementing these techniques to profit from some of the mispricing that happens in the financial markets. He's additionally also portfolio manager at Al Capital and has had more than a 25 year long career as a professional investor working in some of the largest organizations globally, right, as I'm listed here. And he also has MBA Finance and International Economics from the Booth School of Business in the University of Chicago, and an MSc Astronomy and a GD Corporate Law from Leiden University. The third member of the faculty is Dr. Puneet Arora, and Dr. Puneet is Assistant Professor Economics at the University of Ahmedabad, and he also holds a PhD in Economics from Georgia State University and a Master's of Economics from the Delhi School of Economics. Now, Dr. Puneet was also previously Assistant Professor at the Indian School of Business and Finance, and he has significant research experience in the overlap of behavioral economics and finance, exploring areas within education, corruption, tax evasion, government effectiveness, among many others. The fourth member of the faculty is Divanshu Sethi, and Divanshu is behavioral economist with us here at Beast. He also holds an MSc in philosophy and public policy from the London School of Economics and a bachelor's in economics and business from UCL. Previously founded a digital savings startup, very applied behavioral insights and behavioral finance to actually improve savings in the underserved market here in India. And he's also worked with public policy institutions globally in London and Delhi. And lastly, there's me. So I'm founder and CEO at Beast. I'm also now adjunct professor at the Indian School of Public Policy. I previously co-founded and head the Nudge unit at the Warwick Behavioral Insights team, where I'd gone for my master's. And they were typically focused on applying these insights for decisions that students make in the university environment. And I have a master's in behavioral and economic science from the University of Warwick, a bachelor's in economics from Delhi University. And lastly, I've applied these insights and principles, driving consulting projects in various industries that I showed you earlier within finance, banking, and also consumer research. Now let's talk about what you get in the course, right? So I've listed down 10 points here, which are the key to remember. So we've really focused on creating a comprehensive course on behavioral finance, right? So a real thorough, extensive program, covering all of the principles, insights, and all of the new research that's come out. We're also bringing out behavior-based trading and investment strategies that you can actually practically apply, right? So it's behavioral finance and investment strategy, right? So our course lies in that overlap and really focuses on giving you applied practical knowledge. There's more than 6 hours of video lectures, that are divided into 19 bits. There are 14 interactive quizzes, that reinforce your learnings. The certificate is shareable. We're teaching through real-world examples and case studies of stocks and securities. There's personalized one-on-one coaching just in case you want to run anything by us, or there's any questions that you have regarding the principles that you've learned or how you can apply it, or any research you're working on, right? So you get one-on-one session, with available faculty members as part of the program as well. We've curated a thorough literature review covering both the academic and practical side of behavioral finance and investing. That's part of the student experience. So you look at the lecture, you go through the readings, and then you reinforce your knowledge through the quizzes, right? That's how it's divided. And the final weeks, have a capstone project where you will be applying these principles and techniques in a real life market scenario. And, I don't want to give obviously everything away, but, it focuses on actually identifying stocks, creating portfolios, or, creating plans about how these things can be implemented the kind of financial problems you will be facing at your work, or as just a retail investor, or even as someone who wants to improve his financial well-being. So it's really going to focus on getting you into the markets, giving you real life scenarios, examples, and you'll be working your way through applying these behavioral finance principles and really applying them for profit or to actually improve your economic outcomes. So the course is self-paced. However, we suggest that you complete the course in 8 weeks, and it's divided week-wise, but you can go through it, at any pace that you wish. So week 1 is, foundations in investment behavior, and the focus here is really on building from the grounds up. So it doesn't really matter, whether you don't remember, what you did in your economics lectures as an undergrad student. We're going to build everything, from the ground up. First starting off with an introduction to behavioral finance, then looking at what the traditional or the neoclassical models are of decision making under risk. What does it really mean for investors to be rational, right? Consistency, for example, right, or not being driven by emotions. So, what does it really mean? How can we model an investor to be rational? So that's going to be the starting point, right? And then we're going to see how this the rational investor paradigm actually breaks down in the real world, as the Nobel Prize winning researchers found. And then we devise a new behavioral decision making model under risk, right, which is actually called prospect theory. So we're going to see how we can identify and incorporate these anomalies to improve our understanding of investors and the actors in the financial markets. And we'll also explore key aspects of the human mind, and how the dual system of, for example, thinking fast and thinking slow, and being lazy in the kind of decisions that you make, taking shortcuts in the kind of decisions that you make, how they really make their way into choices that you're making in a scenario of risk, right? So that's the foundational week, right? So we're going to focus on what it means to be rational. We're going to depart, create a new behavioral decision-making theory under risk, and that's going to be the starting point of then starting to apply these things in the real world. And so weeks 2 and 3 actually will focus on the core concepts in investor psychology, how they come in the way of investment returns, and how you can combat them, right? So week 2 is frame dependence and focuses on social aspects like herding. So frame dependence is nothing but the way options are being presented to you in the stock markets, the way you're looking at losses and gains in your portfolio, right? The way you might actually have a fear of missing out or regret, right? So how can we actually define these aspects of our psychology? When do they work for us? When do they work against us? And how can we guard against them to actually improve returns and performance? And we'll also be looking at the extremely interesting topic of herding, and how bubbles are created. And sometimes it can be good to ride the bubble, and sometimes it can be bad. So these are concepts that are also explored. So week 3, continues on the core concepts, and this week, focuses on heuristic-driven errors. So the kind of shortcuts that we take when we're making financial decisions, and how they seep their way again into a poor performance on our investments, and how we can finally combat them. So representativeness is a very interesting one on how we make biased forecasts, right? Or whether it's forecasting a trend, or whether it's forecasting future cash flows, right? So what is the representativeness shortcut that we often take, and how do we naively project these into the future? Another is availability, right? So how does the available environment around us, the available news around us, right? How does that actually end up biasing our decisions? How we can guard against that? How in Anchor and Adjust we look at how whether or not we update our beliefs regarding companies on time, right? And do we do it in the right way? And also how overconfidence comes in the way. Actually, it's very interesting that study was done with drivers of vehicles, and I think they asked them that how confident are you that you're actually better than the average driver, and I think 70 to 80% people said that I feel I'm better than the average. That doesn't make sense, right? How can the majority be better than the average? So I'm sure even as investors, we don't think that we're a bad, we make bad investment decisions, right? People, it's something that we don't really like to accept, that I'm a bad investor and I made bad investment decisions. So we can often be overconfident. So we're going to define what overconfidence is, what the psychological traits are, what it really means, what the reasons are, and how we can combat this when we're making decisions in our portfolios. Then, so that's weeks 2 and 3, right? So we are looking at the core concepts, seeing how these make their way into our portfolio decisions, how we can guard. Now, weeks 4, 5, and 6 are are going to focus on what's happening in behavioral finance in practice. Right? So this focuses on what I told you about, what some of the largest banks and funds are doing, to profit from the market, right? And so, we have, real world examples and cases that, you'll go through from the professional finance, industry, how professional investors fall for these biases, how they can combat them, what the philosophy, techniques, and the efficacy is of behavioral finance funds. We'll also look at how behavioral biases make their way into traditional valuation techniques that we use as investors or traders, right? And that we learn in MBA or finance, programs. So an example is discounted cash flow, right? So what kind of biases come up when we are making these models, and also, when we're using shortcuts like the price earnings ratio, things like that. So that really focuses on how we can improve our ability to value companies and value investments by understanding the biases that come in and by avoiding them. And modules 14 and 15, focus on two key, trading and investment strategies that are used by some of these funds, trading specifically on biased market reactions to company earnings, or also over optimism or over pessimism. So how do we define that? How do we identify those stocks, right? How does it tie up with applications of value investing, for example? So how do securities actually get mispriced, and how we can design a portfolio or a group of stocks based on these techniques. Week 5 will go broader, right? And it's going to look at market as a whole. So we're going to be looking at behavioral portfolio theory, right? Which explores, a one-based approach to the way we can actually model people's decisions regarding the kind of assets they allocate in their portfolios, and also the perception of risk. And so that's really interesting new model of actually devising portfolios that is different from the traditional modern portfolio theory. Right? We're also going to look at the adaptive market hypothesis. So this is an alternative to the efficient market hypothesis, and we'll see how we can actually define how markets might be working in the long run from a behavioral perspective. What the main components are, how they adapt over time to different behaviors, etc. So we'll be looking at the fact that, okay, if people are not rational and markets are not efficiently priced, then what kind of other model can be created, and we'll be bringing this out from the behavioral finance literature. Now, week 6, focuses on financial well-being, right? So there's more to money than just investments and return. So we're going to focus on what the complex relationship is now, as behavioral finance has showed us, between money and happiness. How we can spend effectively to actually increase our levels of happiness, and maybe avoid some of the expenditures that we do that we think will make us happy, but they don't really end up making us happier. So this is really going to focus on that. And then finally, we have module on personal finance and budgeting, and this is going to tackle the age-old problem of how do you save enough for life, for example, for retirement. How do you manage debt, right? What kind of behavioral techniques can you use personally, or for your families, etc., so that you can avoid biases and really secure your financial well-being for the future. So that's the final sort of learning part, module of the course. Then we have a 2-week capstone project in the end, where, as I already shared with you, we'll be getting real hands-on experience applying these concepts in real life market scenarios. And this focuses on how you can actually implement this to improve your financial decision making, whether it's in your portfolios, whether it's identifying securities, or whether it's perhaps improving your happiness, or just the way you manage your money, right? So these are going to be real life scenarios that are going to give you with real world data, etc., that you'll be working on. So that's so far about the course. So I'm sure you've already seen that there's a significant overlap between academia and the practical aspect, right, that we're bringing out in this course, and we're really giving a comprehensive understanding of behavioral finance and how you can actually use it professionally or personally to improve economic outcomes for yourself or even for your organization. And so with that, I would like to conclude our special event, and you can go to our website as soon as the event is over to know more about the course and all the modules in more detail. I sincerely thank you for joining in today, and I would also like to take a moment to give a big thanks to all the faculty members who put in their time and effort to help make this course a reality. Really, thank you so much. And, I and everybody is so grateful. So that's me now signing off. And I look forward to seeing you in the classroom. Please feel free to reach out to us on our email address as it's written on our website if you have any follow-up questions, and we'll be happy to answer them for you. Thank you so much. And we're very excited to go live. See you.